Welcome, ladies and gentlemen. You are watching a Crypto Hamster channel, and today we'll talk about very important topic, in my opinion, the risk management. It is actually quite huge topic to cover, so I just briefly touch the not even the basics, but the approach uh, of the investments in crypto market uh, along this line with respect to risk management. Some very basic things, but they're very important for you to not to lose your investments. So the idea is that, of course, the crypto market investment trading is very risky. So you need to somehow hedge your risks um, by any means. The simplest thing for a person who is new to the market is to make uh, trials with a very small amount of your investment amount, so a small amount of your investment money. So let's assume, for example, you have $50,000 savings or something like that. And um, this is maybe um, sort of your annual income. Um, or maybe you earn like 50,000 in a year. And in that case, I would say it's better to split it in half and keep half of the 25,000 in a bank in the same way you used to do that in fiat money, and a half of that you may think of this ratio, but at least I would do this at least like that. And of course, on the amount, depending on the amount you have, and like different conditions which I already covered previous videos, but uh, at least like that, half, like 6 months salary is better to keep for the time when you may need it. It might happen if you like invest everything. It's very risky in general. So better to be careful in that way. So you keep your 25,000 in the bank, and 25,000 you consider to be as investment. Never invest all your money, right? So how to do that? I would say let's split it in 5 parts. First, have your 25,000 split by $5,555,000, and then what you need to do is to slowly, carefully, without very like fast fast moves, enter the market. So take this first part, first 5,000, and buy some bitcoins or altcoins. I would say for the easiest, safest way, buy for 80% for that of that is but buy bitcoin for 80%. That's $4,000 for bitcoins, $1,000 for altcoins, maybe two for altcoins, for example, like Ether or something, whatever. And then the rest of your money, this $20,000, just keep it for a while. Let them be there. And the beauty of this approach is that you don't know the entry point at the moment, whether it's good or not. Like you may apply it when Bitcoin was $1,000, when Bitcoin was $20,000. It still will average your, to some extent, of course, will average your risk and, of course, your profits. But it's better to um, have the optimum between the gains and the risks you have, because it's the major approach, major idea of the getting profit in investments, you need to have a good risk to reward ratio. So again, you bought your crypto for $5,000 now, today, and then you wait for like uh, whatever, 1 month, 2 months. Just wait, don't do anything, or at least you can play with this Bitcoin or something like that. Part of that, you can reinvest it to buy different altcoins, whatever. Okay, you can do with this 5,000 whatever you want. It's still 20% of your initial portfolio. You maybe even lose some of it by trading or swing trade or something, but the rest you should keep. After 1 or 2 months, you will have enough experience, I believe, to like consider the next trades, and they would be much less silly. Well, I wouldn't say that your first trades are silly, of course, but they will be much more wise and much wiser. So it's better just to wait this 1 month, something. Then again, you can buy one more Bitcoin, one more altcoins, more altcoins as you did before. Then wait again 1 2 months after that. You can reinvest those additional $5,000. Again, Bitcoins, altcoins, those would be even more reasonable trades you will do, I believe. And actually, let's be honest, uh, most of the people who enter the market, they enter in very bad time. I mean, not bad time for the market, but bad time for them because they buy it in very high price. And this waiting time for you to continue to invest will give you first like the um, look at the things, the way you can see that, oh, actually it was the bad trade, it was the bad decision to enter, and now I understand more, and now I can see that if I'll buy now, I'll actually get more profit, presumably, and so on and so forth. So as soon as you postpone this additional investments of your part of your portfolio, you will like save more, you will not lose more. Then after additional 2 months, I would say, okay, you can spend one more portion, one more $5,000, and it probably will be like already at least 3 to 6 months, and after that you will be rather skilled. And this is very important because probably a lot of the portion of this first part of your investment will lose the value. I would say it's for sure, but it's quite probable. So, but this additional 5,000, they will be profitable enough to cover all the losses and even give you profit, I personally believe. And you have still 5,000, but keep it. Don't invest, because you always will find some entry points for some altcoins or even Bitcoin, which would make you think, oh, if I would only have like additional money, additional fiat to enter, I will probably buy it now. And then it will give you like, if you don't have it and say you didn't make this trade and it makes like 1,000% in a month, and say, oh, I knew that I need to buy it, but I didn't have this money. So just keep it, and after 6 months of your experience, you would be skilled enough to know whether this case is good enough for you to use this final money, or it's still better to wait and keep this money like for better deals. So if you do it this way, yeah, again, you can see it's not exactly the like risk management theory or whatever. It's just the approach would help you to lose less and apparently um, make more like sustainable growth of your profits. So if you'll apply this, you'll have uh, Bitcoin. If you, let's say, do this like exactly I mentioned, of course it's not a fixed scheme or something. It's just I just made this in the way that maybe it's more, I wouldn't say reasonable, but it's not crazy approach, let's say, like that. So you'll have like do it like that, then Bitcoin will have 16,000, 80%, or 64% of your total, 80% of your initial, and then 64 of your total, 25,000 altcoins, $4,000, 20%, or 16 again. And fiat is still have 5,000, 20% of your investment money, initial investment money. What I was going to say more is that adjust this according your risk tolerance and the other important things which are applied to you. Risk tolerance, like you don't buy Bitcoin at all. You may buy only altcoins, and very risky altcoins. If you don't care about your $25,000 at all, you may buy just a very risky asset, but with a very high potential, and then you may indeed become a millionaire or whatever, if you're not yet. But if your risk tolerance is low, then you better just to really do it slowly. Okay. Diversification. Be careful to not to buy only one thing or two things. It's always better to not bad. It's not wise to put all your eggs in one basket, right? So diversify and consider risk-reward ratio. I will cover this in the next videos about the technical analysis and principle, just like ideas of tradings. So if you are interested in this content, if it seems to be helpful for you, please consider subscribe and see you in the next video. Goodbye.